Okay, welcome again. So, like I said, we want to look at the statement of changes in equity, and we want to see a practical number of how to do such a number. So we have this question, and this question is about a manufacturing company called Bemba that deals in the manufacture of plastics. So when you look through this question, whenever I usually get a question like this, what I do is get down to the required. What does the examiner require of me? So this question is requiring us to prepare a statement of manufacturing cost, a revaluation account, and then a bank account. Now, for today's lecture, I don't want to concentrate on these three above. My interest is on the statement of changes in equity. And what I'm trying to say is that whenever I see that the examiner is asking me to prepare a statement of changes in equity, my interest now is to get back to the trial balance presented to see which are those items that I would regard as items that fall under the statement of changes in equity. So as we can see, we started with opening inventory, and opening inventory is a current asset. So it's not an item of equity. And we move to, of course, for manufacturing, this is how they are broken down. We move to this line here, where they're saying purchases stroke sales. And here I'm saying that this is for purchases and this is for sales. Why? Because purchases have a normal debit balance, while sales have a normal credit balance. Sometimes the examiner does this to confuse you, but you should be able to tell. This order does not matter here. What matters is your understanding on what is usually on the debit side and what is on the credit side. Example, like now here it says returns, but gives a figure here and also gives a figure here. So yours is to know that these returns, these are goods returned, okay? And these are goods returned in respect to the sales, because these are the sales. Now, if we are to have returns, they will be on the opposite side. So these are returned inwards. Our customers took goods and either they are faulty and they have returned them. Now, this 4,500 is representing return outwards. And it's in respect to the purchases. Even us as a business, we purchase items, but these items may either be faulty or they over-delivered and we have to return. So that is what we call the return outwards, okay? So that is important. And then very similar to that is the discounts. So discounts, they're telling us that discounts, we have 4,000 and then 2,000. Again, the examiner is here also testing your understanding of discounts and their accounting entries. Discounts received is an income. So I would expect that this 2,000 is the discount received because incomes have a normal credit balance. Well, the 4,000 is the discount expense, which is a discount allowed. When we allow our customers a discount, there is a discount allowed. When we receive discounts from our suppliers, that's a discount received. Then we have carriage inwards and carriage outwards. Carriage inwards, these are logistical costs that we incur in bringing our purchases into our premises. And we know that when we are preparing our P&L, carriage inwards are added to purchases. Carriage outwards, this is what we incur when we are transporting goods to our customers. These carriage outwards are not added to sales, but they are recorded under our operating expenses. It's very good to take note of how to account for those. The examiner also comes here and combines trade receivables and trade payables. So yours is to know that 54,000 relates to trade receivables, well, 32,000 relates to trade payables. So we move direct labor cost. Of course, this is more of an expense side. Other direct costs more from expense side. But for manufacturing accounts, we'll be able to understand how we classify these. Remember, our interest is look for the items of equity. We've not found any yet. We have land and building, machinery, motor vehicle, and so on. These are non-current assets. So we have equipment. They provide us information here. Then we have furniture, accumulated depreciation. Then we have factory salaries and wages. Then we have all these. We don't see any equity item. Then we now start. You see these that we are seeing here? These are our equity items. These are our equity items. And remember, this is asking us to prepare a statement of changes in equity for the period ended 31st December 2022. So it means that this is the trial balance for 31st December 2022. So these are our period end balances. But remember, we say that when we are preparing our so-called statement of changes in equity, we start with the balances brought down. Now, these balances here are not the balances brought down because these are balances at the end of the period, okay? These are balances at the end of the period. So ours is to look through the additional information and see, does the examiner give us some of the balances as at the start of the year? Okay. We look at this information and see. So let's see. Because this is at the 31st. And then we see were there any balances at the start of the year. Okay, they are giving us something to do with revaluations. They're telling us management made a transfer of this authorized share capital of this 800 shares at 1,500. The company issued the remaining shares at 2,000. You can see that this is a price over and above the nominal value, okay? Because the nominal value is 1,500. So if they issued shares at 2,000, then there's an aspect of premium, okay? There is an aspect of share premium. They have also given you here, they are saying the company directors declared and paid 40 for each odd shareholding. Now, one thing that I need to comment about is every time you have dividends, one of the items that is very common in a statement of changes in equity is if you have dividends. If you have dividends, dividends will always be issued off. They will be issued off your retained earnings because this is where you included your net profit or loss, okay? So let's just imagine, because you cannot issue a dividend when you have made a loss. So let's just imagine this was actually a profit. So you have a profit, so it means you have some money here, so you issue dividends. In case you issue dividends of 100,000, these dividends are written as a negative under this column of retained earnings because they are reducing on your profits. So this is what will happen. So it means that this will now change. You've seen it has changed. It has reduced, and you have your 100,000 here in this side of the totals. Okay, so that is what has happened. This one, we had a zero balance here because the difference between this and this is actually zero right there. So that is what exactly happens. So I want to go back to our question here. So the examiner has not given us the opening balances. Okay. So since they have not given us the opening balances, we're now going to leverage on what we have and then create adjustments. Because once the examiner gives you, for example, they have given us this information. Where is it? Okay, right here, where they have told us that ordinary share capital is 900,000, share premium is 180, general reserves is 34. We are going to use these as our balances brought down, okay? And now what we are going to do is they are telling us that additional information. So we are now going to adjust these items here based on the additional information. Okay, so again, revaluation gain is also an item of equity. That is also very important to take note of. That revaluation is also an item of equity. So what we are going to do in this case is I'm going to get those items as how we have them there and now move them to my Excel. So I'm going to leverage on this. And then I'll be able to adjust it accordingly. Now, this time I don't have preference share capital, so I'll not have a column on preference share capital, but I have something on revaluation gain. Sometimes revaluation gain can be called revaluation surplus. Okay, at least I have something on retained earnings. I also have something on general reserves. Like I said, whatever is in the question determines your heading. So 1, 2, 3, 4, 5. My headings should be 5 headings. 1, 2, 3, 4, 5. Okay. Then I'm going to now say this, instead of calling it opening balance, I'm going to say balance as per trial balance. So this is what is coming from the trial balance. So I'm now going to record those values as they are. Okay. So I have 900. Let me just try to paste this here and then copy immediately. So my share capital is 900. Share premium. Share premium is 180. General reserves is that. Retained earnings is that. And then revaluation gain is that. So I've been able to input my information. I just want you to see that revaluation gain here is a negative, which means that it's more of a revaluation loss. But since the heading is revaluation gain, but for us, we shall ensure that we record the negative the way it is. Okay? So that is what we have. So when you now come to our additional information, we shall look for those items that affect our equity items. So they're telling us that management made a transfer of 14,500 to general reserves. Okay. So what I'm going to do, let me just have my heading on this statement of changes in equity. So that makes sense. So that's the statement of changes in equity. So what management is saying that you have a transfer to general reserves. A transfer to general reserves. So a transfer to general reserves means that you're going to remove this money from the profits. Like I said, usually general reserves are picked from profits. So you can see these values are in millions. Well, these values were in 1,000. So it's very important for you to also ensure that your degree of precision is not forgotten. So I'm just going to write here that my values are in 1,000 of shillings. Okay. It's very important to note that. You can put maybe on each of them, but even the top heading, that's okay. So it means that if it's 14.5, I'm going to come here and say minus 14,500 And then when I come here, I'll put 14,500. Remember, this total should total everything as it is here. And now we shall also have a total for here as well. The total here will be 0 since it's a transfer. So that's the first item that is there. Then I'll move and see. They are saying authorized share capital is 1,200,800 shares at 1,500 per share. Okay. The company issued the remaining shares at 2,000. Now remember, we already have some share capital here. Okay, of 900,000. And they're telling us the authorized share capital is 1.2 million. Okay. So what this means is we are going to compare, okay? We are going to compare our authorized share capital with what we already have as issued. With what we already have as issued. And then be able to now calculate backwards to determine what then would actually be our so-called, what would then be our so-called issued share capital. Okay. So just a moment. So remember we already had 900,000. We just try to show this. So we are here. So we had share capital of this, and now we want to look at issue of share capital of new shares. So you can say issue of new shares. Okay. That is what we are saying. So what we are going to do is we are saying that the authorized share capital as per the additional information is 1.2. Okay. And we have already issued 900. So this means that we're now going to look at the difference. These already issued. These are new issues. So they basically, this is the newly issued share capital. So this is what they did issue. But it's something that's very interesting that I want you to see. The examiner was very bright. They didn't give you the number of shares that were issued. They did give us the number of shares that were issued. What did they rather do? They gave us, they came and told us that 800 shares were the one that were existing. Okay. So yours is to find out what was the remaining balance that is to be issued, because they're saying the company issued all the remaining shares. But remember, these shares at 1,500. So when you come here, they're telling you that Okay, this is 900 million. Since we have the thousands up, I just want to do a simple calculation there so that you can understand. Maybe since I'm doing from here, let me even include the 3 zeros. Okay, so this is 900 million. And then this was 1.2 million, 1,200 million. Let me just add 3 zeros as well. So this is what we have as our, in terms of share capital. So this is the amount. Now we have the number of shares. So the number of shares here, they are telling us that the examiner has told us that there are how many? That there are 800 shares. So there are basically 800 shares. So this is 800,000 shares. That is what we have. Remember, there is a share price, which is 1,500. So it means that when you multiply this 800 times 1,500, you come to 1.2. So if we are to determine the number of shares that are existing already as per our trial balance, we shall get this 900 divided by 1,500. So it means that the shares that are yet to be issued is the 800 minus the 200, which gives us the 200,000 shares. Now, the examiner comes and says something and says that the company issued the remaining shares at 2,000. So if they issued that these shares at 2,000, not 1,500, it means that our share capital, the newly issued share capital, is going to be the 200,000, okay, multiplied by 1,500 to give us the 300,000, okay, in terms of our so-called this is 200,000 times 1,500 to give us this 3 million, okay. Now, yours is also look at, do we have anything called share premium? Share premium will be now the shares that are to be issued, but this time we are going to multiply by the difference because they issued at 2,000, so it will be 2,000 minus 1,500, okay? Which means that this will give us, what's the difference? This times this. So as, let me do this calculation also so that it doesn't just, so this is 300 million. Well, this is 100 million. So when I'm updating issue of new shares, since these things are in thousands, I'm going to come under share capital here and I add 300,000 like that under share capital, and I'll come under share premium and add only the premium value, which is the 100,000, 100 million, since I have thousands here. So this is what I basically do have when it comes to the issuing of the new shares. Yes, Paul.
Mr. Ibanda, what I wanted to find out, remind me how we're coming with the 600,000 under the number of shares.
Okay. I'm just going to come back here and say, they are telling us that the authorized share capital is 1.2. And this is a representation of 800,000 shares at 1,500. This is what the company should issue out as authorized share capital. But they have told us here that under our current share capital is at 900,000. So ours is to ask ourselves mathematically, if our total shares, okay, are supposed to be 800,000 and it is supposed to be 1.2, but we now have 900,000, what do? We shall basically get this 1,500 and get this 900,000 and divide by the two figures, 900,000 divided by 1,500 to determine the number of shares that we currently have. Is that okay, Paul?
Yes, please. Thank you.
Yes, you're welcome. So that is what you basically have. So that's how we came to 600,000 and knew that we're now going to issue the 200,000, which is the difference between 800 and 600. So when you get 200 and multiply by 1,500 for share capital, we based on the actual price. So that's how we got the 300 million. And then for this, for the share premium, here we're now looking at the difference, the premium value with the 500, because they issued the shares at 2,000. So the premium is 500 and we are getting this value. So that's how we are coming to this, okay? So the next thing that I'm going to look at is this. The company declared and paid dividends of 40 for each shareholder. So remember, the shareholders that get the dividends are the ones that existed at the end of the year. So the shareholders that existed at the end of the year will be 40 times the 600, okay? So I'll just come here and say dividends. Now, there's something I'm trying to now look at, because if at all we have, like I said, we have a dividend of 40. Now it's going to be multiplied by the 600,000, okay? Which is going to give us the 24 million. But since we are now dealing with thousands, we shall remove the 3 zeros and you have 24,000. And this would be a negative, since dividends are issued from your retained earnings, okay? So this is how the dividends will appear. Remember your totals here, make sure that you have your totals right there. So that's how the dividends just come here. Then the next thing that we want also recognize, the last one, is the net profit. So the net profit for the year is also supposed to be recorded somewhere. So I'll just come and say my net profit for the year, I'll come and pick this value. It's recorded under the retained earnings because it increases the retained earnings, my profits. So what I'm going to do, I'm also going to, this didn't have zeros, so I'm going to remove these 2 zeros and put a 0.4 here. Since it's now, remember what they gave us, let's just see. It was 12 million, actually it is 12 million. So I just removed the 3 zeros to remain with 12. That, so I'll just come here. So once I have my profit here, I've now actually gotten all the information that I needed. So I'll just come and add all the columns. I'll add these columns here, 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 here. So as you can see, the total here should be the total here. So I'll also try to get the column here. Sorry. So here is giving me, just move down. So this is 1598. This is also 1598. So I'll just get one of the totals and put it here. So that is what basically was needed. And if you try to, because this was a model exam,